Hello and welcome to the weekly bull bear market report. My name is Adam Straseske. Happy 2018, and I'm excited that you're taking the time to find out the indexes that we like and know what's going on in the market. And so let's jump right into it. Here's what we're going to cover. Same as always. We're going to go over the broad market readings, and then we're going to get into this week's operating plan, what indexes we like, any closed ones, which are none, and then any possible indices. So first things first that we always look at, are we on a risk on or risk off stance? We are on a risk on stance when it comes to the 12-month rolling momentum for the S&P 500 and the All World ex-USA index. The All World ex-USA index is outpacing the S&P 500 slightly, although both of them are very bullish right now when it comes to the measurement against treasuries. So until we get these two little lines below the red line here, we're in bull market. So risk on right now. When it comes to correction risk, last time the market was in here in this area, we were basically in a sideways choppy market, and so we'll see if that holds on to the this coming week into what it's done in the past in this range. But breadth is changing right now. You can see how it jumped up all the way back here in October, how breadth was very high, and then we had the run up in price, and we're not seeing that jump in breadth. And so what that's telling you is that we're not seeing as many stocks participate in this last advance as we saw in the previous advances. So we'll see if breadth can pick back up and the market can continue higher. But right now, the correction risk as far as coming into this week is a little bit higher right now. When we look at the stage of the S&P 500, we are still in this broad bull channel. Looks pretty good for the bulls, even though it is extended. We're really close to the top of the channel line. So we had this little inside bar, basically a flat week for the S&P 500, down 0.36% for the week, leading into the first. And so it's going to be bullish until we break out of this channel. Or we start to see a series of lower highs and lower lows. And right now we're just not seeing that. We're seeing higher highs and higher lows. So the bulls still are in control, but when we look at the past couple of weeks, the bulls are weakening. The current operating plan, we still like preferreds. That's our highest yielder. And then, of course, the MSCI All World ex-USA index. And here are all of our weekly swings. So we've got charts for all of them except for the inflation protected bonds. But here they are. So All World ex-USA up almost 1% for the week. Looks pretty good. We are still waiting for a larger pullback to build a larger position, but we've got a little bit of cash right now, but any of our second purchases that come into play will eat up a lot of that cash, and so not too worried about that. But looks good for the All World ex-USA index. Nice week for it, up, like I said, almost 1%. Canada up 1.45%. Would have liked to see it close on the high for the week, but not bad. Not bad for Canada right here. So we've already adjusted the stop up once. No second purchase range for this one. If it does, in fact, break above this channel line right here, we'll look at taking some profits. And if it does, we have another nice strong week up this coming week, then we will adjust the stop loss up and go from there. UK up almost 2.5 to 2.34%. Nice bullish breakout. If we see a little bit more follow through, then we will adjust the stop loss up on this one. We could probably do it right here, but I'm going to wait just a little bit longer and see how this coming week plays out. If it does in fact move higher, then we will adjust it up below this guy right here, this neutral. You can see the arrow right there above this one, right, or below this guy. So it looks good for UK. Japan, flat week for Japan. Inside bar down 0.2 or 10% for the week. We've got a stop way down here. If in fact this guy does come up and break to the upside, then we'll adjust the stop up on this one for sure. But still looks good for Japan right now. Oil, great week for oil, up over 3% for the week. Nice bull breakout bar right here, and just really like that it's staying above this channel line, and we can measure a target out to the height of this channel, but it's still got some room to move to the upside. And more than likely what we're going to end up doing is adjusting our stop loss up to below below here, right in this range. But we're going to give it one more week and see what happens. U.S. Treasuries up 1.32% for the week. This is probably one of the weakest ones that we're looking at. Doesn't look too great, but doesn't necessarily look bad either. We'd like to see them really just trending to the upside, like some of the ones that we've already looked at. But this one is more of in a channel right here, and so it's at the bottom of the channel. If we can hold here and get another buy signal, we might be able to see a nicer run in Treasuries. Australia up over 1% for the week, right at the top of the channel. If the bulls can break it out to the upside, then we'll again move the stop loss up on this one and protect some of those profits. But it looks good for Australia. Really need the bulls to pull it off here though and see a strong breakout for the week. So we'll see if we can get that. Brazil up over 2% for the week. This is what we call a high 2 buy. We had a high 1 buy right here, and here is our high 2. So you can see we had a pullback, an advance. Here's the second pullback, and this could be what is the start of our advance to test this high and quite possibly break out to the upside. So depending upon the price action from here will depend upon if we move the stop loss up or not. But we'd like to see it get up there as fast as we can. If we see that, then we can leave the stop down here. But if it just kind of trails up little by little, it'll show a weakening market, and more likely we'll move the stop up from there. And that's it. So for the monthly trender, we want to build in the All World ex-USA index. No new weekly swings. We've got some second purchases, like for example Treasuries, that we might see this week. Kind of doubt it, but we could. And the other ones are pretty far off. So, and nothing for the scalps. It's not really a scalping market. Not a lot of scalping markets right now, and the ones that are in a trading range are pretty tight, and so not a lot of opportunity for the scalps. With that, I hope you have a great start to 2018. Have a great week, and subscribe if you like it. Thanks.